Hello everyone, welcome to this channel. This is part 1 of our discussion on Bretton Woods twin. Let's get started. Now before understanding what a Bretton Woods twin, let us understand the historical background behind it. The context was World War II, which started in the year 1939 and lasted till 1945, caused huge devastation across the globe. Nations faced severe destruction of critical infrastructures, collapsing of trade system, volatility in currencies, and financial instability, and more importantly, massive unemployment and poverty. Therefore, a conference was convened on 1st July 1944, wherein delegates from 44 nations met at a place called Bretton Woods. This conference was formally called as United Nations Monetary and Financial Conference. The purpose behind this conference was to agree upon a set of new rules for post-war global economic reconstruction, development, and monetary stability. The result was establishment of International Monetary Fund and International Bank for Reconstruction and Development, which was later known as World Bank. As these two institutions are born out of this conference at Bretton Woods, they are collectively referred as Bretton Woods twin. And in this video, we will be discussing the one set of institution, that is IMF. IMF, or International Monetary Fund, is a global financial institution that aims to promote international monetary cooperation and ensuring financial stability. It is often referred to as lender of last resort because of its BOP, or the balance of payment assistance, that is granted to its member nation to rebuild their international reserve, stabilize currency, paying for debt servicing and imports, and more importantly, restoring conditions for strong economic growth and resilience. It is one of several UN specialized agencies. It is headquartered at Washington, D.C. Its present total membership is of 191 countries, the latest addition being the Principle of Liechtenstein. Now let us look at its objectives: encouraging international monetary cooperation, assurance of financial stability, making international trade easier and accessible and beneficial for all, encouraging high employment and ensuring long-term economic prosperity, also reducing poverty. Now let us have a look at the governance setup of IMF. The governance setup of IMF has two tiers, the first being the executive board and the highest tier being the board of governors. The board of governors acts as the highest decision making body of IMF, which usually meet around September or October every year. Its functions are to approve quota increase, SDR allocation, admitting new members, and compelling member withdrawal. Each member country has their representatives in the form of one governor and one alternate governor. For example, in case of India, the finance minister is the governor and RBI governor acts as an alternate governor to this forum. In order to oversee the day-to-day administration of IMF, we have the executive board, which is a 25-member board with managing director as its head. Managing director is appointed by the executive board for a period of 5 years. Present managing director is Kristalina Georgieva, who is serving her second term and has been managing director since 2019, and her second term started in the year 2024. Apart from these two boards, we have two ministerial committees. These are International Monetary and Finance Committee, or IMFC, and the developmental committees. These two committees generally meet twice a year. Now, the function of IMFC are discussing matter of common concerns around surrounding the global economy and advise IMF on direction of work to be followed. One important point over here is World Bank also participate as an observer in this conference. The next ministerial committee is the Developmental Committee. It is actually a joint forum of World Bank and IMF which advises on critical developmental issues including trade and environmental concerns. Now let us look at IMF source of finances. IMF source of finances can be broadly classified in three heads. These are individual member countries quota, which acts as the first line of defense, multilateral borrowing agreement, which are the second line of defense, and bilateral borrowing agreements, which are the third line of defense. Now let us look at each of these in a greater detail. IMF quotas. They are the building block of IMF financial and governance structure and most important and primary source of funding. They are denominated in SDR, which is IMF's unit of account. Quota determines financial contribution that each member country is required to make to the IMF. It also determines the voting power that a particular member country has in IMF's key decision. Also, access to financing and share in SDR allocation. Every member country's quota is determined by four key variables. These are country's GDP, openness to trade, economic variability, and the international reserves that the currency has. Now, looking at the second line of defense, new arrangement to borrowing. Under this, certain member countries and institutions lends additional resources to address challenges concerning international monetary system. And finally, the third line of defense, which was created or which is in force since the onset of global financial crisis of 2008, IMF has entered into several rounds of bilateral borrowing agreement to supplement its members' financing need. Now let us understand what are SDRs. SDRs are international reserve created by IMF in the year 1969. It acts as a supplement to member countries' official reserve. For example, in case of India, foreign exchange reserve include the gold reserve, foreign currency assets, IMF's reserve tranche, and the SDRs. The value of SDR is based on basket of five major currencies. These are US dollar, euro, Chinese renminbi, Japanese yen, and British pound sterling. The SDR basket is reviewed every 5 years or it can be earlier as well if warranted. For a currency to be included in SDR basket, it must meet two essential criteria. These are the export criteria and the free usability criteria. For export criteria, the issuing country must be an IMF member and also one of top 5 world exporter. For free usability criteria, that currency must have wide acceptability for international transaction and also in principal exchange markets. Now let us look at functions of IMF. As already mentioned, IMF's function or aims to promote global monetary cooperation as well as financial stability. Therefore, the function of IMF can be broadly classified in three heads. First being financial assistance, second in terms of policy advice, and third in terms of capacity development. Now let us look at the financial assistant head of IMF, wherein IMF provides support to countries hit by financial or economic crisis by means of various lending instruments tailored to countries' need and circumstances. This can be further divided into the concessional lending instruments and the non-concessional lending instrument. Under concessional lending instrument, the rate of interest is generally low or negligible. Various instruments under it are rapid credit facility, standby credit facility, extended credit facility, exogenous shocks facility, poverty reduction and growth facility. Similarly, we have the non-concessional lending. The instruments are rapid financing institution, standby arrangement, extended fund facility, flexible credit line, precautionary and liquidity line. Now the next set of functions of IMF are in terms of policy advice. IMF provide policy advice by monitoring the economic and financial policy of member countries, identifying the risk and recommending adjustment to sustain growth and promote stability through surveillance activity. Like IMF play an important role in fighting money laundering and terrorism. Now the next set of functions is capacity development, wherein IMF provide technical assistance and training to member countries to strengthen their economic institution, improve tax collection, modernizing monetary and exchange rate policy, and strengthening governance. Now here are some important reports released by IMF. World Economic Outlook, Global Financial Stability Report, Fiscal Monitor Report. This is all about IMF. In the next video, we will be discussing about World Bank. Also, in the description of the video, I will be attaching a short one-pager note. You can refer to it for revision purpose. If you like this content, do hit the like button and share with your friends. Thank you and have a nice day.